What's up, guys? It's October 29th, 2025. We're going to do a 10-minute breakdown of the E-mini where we talk about trap traders, market cycle, and market context. If you're interested in seeing how I apply these concepts live, check out the membership section where I go over trades, winning and losing, and how they're based around trap traders and second legs. So today was FOMC, trading range for the majority of the day. Then we had that breakout, but even the breakout ended up being a trading range because the bears that short here had a small chance to make money, but ultimately it was a better buy bar that led to 1 hour for the bulls. So not the strongest bearish breakout. We got, what is it? What's the day today? It's Wednesday, so we got Thursday and Friday to go. First trend line break after 4 bars in a row on the daily chart, so generally that's a better fade. Spike to here, trend line break, it's a better fade. Bulls are going to want to get back to the high here. Bears are going to want this to be bad follow through and reverse down. Weekly chart, 3 bull bars in a row, but we still have 2 days left. Bears about to do some damage if they want this to be a bear bar, but it's possible. Yeah, we are trading on new highs, so it's interesting to see. Because I thought this was going to be a start to a trading range, but every bear bar that touched the EMA ended up being a better fade. And this was actually a really good buy, testing this breakout point here. And bulls made 1R, and now they're still making money. So that was a good fade for the bulls. Kind of like how this bar is a bear bar, that was a better fade for the bulls. So bulls are definitely in charge right now. Well, they've been in charge for a long time. Give me 1 second here. Okay. Thank you, guys. And the high school near me is playing a football game, so I apologize if you can hear some things in the background. I can hear the speakers going off. So we have a gap up. Bar 1 has a tail. It's a trading range bar. Bar 2 is a trading range bar. And bar 3 is a bull body. Sold off and then rallied. I took a few trades today. Profitable by a good amount. I scalped the downside and caught it good. I also scalped this second leg here. Just a quick scalp, got filled and exited right around the 50% mark. Took 1 loss, buying the middle of bar 5, filled on 7. Then I got a win right here. Got another win right around here. This was my original target, but then I moved it down. And I exited for a small win. And then I bought here, took a quick loss and just reversed and target hit on 30. And then I caught it because it was a FOMC anyways. Trading range behavior. Bears, there's definitely tradable legs. If you're quick, you could trade the bull side. You know, like 17 shots to get a second leg up, and it does. Leg 1, pull back leg 2, which actually happened in 3. So leg 1, pull back leg 2, pull back leg 3. 1R's hit there, depending on where your stop is at least. So it was a trading range, but there were still some legs that were tradable. Gap up, again, so let's start over. Gap up, bar 1, tail, or has a bear tail, and then it rallies. So the gap up is getting follow through, 3, bars 2 and 3. First pullback, bar 4, better fade. You could buy that and make 1R and just a little bit more than 1R quickly. Bar 7, it's an outside bar. It had the high of 6 is 51.75. The high of 7 is 52. So it rallied by 1 tick and then reversed down and then had follow through 8 and 9. Then we get an inside bar, but the sell-off from the high of 7 to the low of 9, strong to get second leg down, and we can see the shallow pullback beginning. The pullback actually begins on 9, and it ends on the high of 13, and then the bears get that second leg down, 13 through 16. This produces a gap right around the EMA, so that's, bulls were trying to buy the EMA, and they're trapped right there. 17 becomes, now we're trading into that third leg. Leg 1, pull back leg 2, pull back leg 3. And once we go into the third leg, the probabilities for a second leg go down. However, this entire structure was shot to get second leg, and I think that's what we saw right there. So leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3. A lot of bearish pressure. Bears get the breakout. But anyway, so 18 and 19, we third leg down from the sell-off, and then we get that. And then we saw that 2 to 3 leg pullback. Leg 1, pull back leg 2, pull back leg 3. Testing the breakout point below 13. 13, testing the breakout point. And then 24, again, is another outside bar. So bulls try and buy a 23 high, and they get trapped. And then follow through with 25. Look at the breakout, 24, 25. It takes 10 minutes. This is a 5-minute chart, so it takes 10 minutes for the breakout, and then 5, 10, 15, 20 minutes for the pullback. So not the strongest bear breakout, 24, 25. The pullback was longer than the breakout. And then we get 2 more bear bars, 30, 31. Good bear bars closing on the low, but then again, this is way past the third leg down. Leg 1, pullback leg 2, could argue it's a second leg trap. Leg 1, pullback, hidden leg on 28, pullback 3, third leg down. Nonetheless, it could be a wedge bottom too, if you want to count the push down here, or the push on 9. Leg 1, pullback 2, pullback leg 3. There's many ways to count this, but what we gotta know is that 30 and 31 are becoming late in the trend, if you want to call this a bear trend. Now we have another outside bar, 32. Market sells off and then rallies. And a reversal is a form of a breakout. The market can either be breaking out or reversing. In this case, it was reversing, which is type of breakout, and we get 4 bars in a row, 32 through 35. 36 is a bear bar, so it's the first opposite bar. And then you can see that if you bought 36, you could actually fade for a 1-point scalp at 37. If you want to hold for a bigger move, you can see that bar 40 rallied and then sold off, kind of testing the high of 24. There are more sellers right around the 24 high. These bears that had a limit order here were able to take scalps here, and even got a sell off before FOMC. So not too bad at all. 46 through 49. Sean to get second leg down, leg 1, pullback, leg 2, but then now FOMC starts. Look at bar 55. Big trading range bar. Market's trapped within that trading range bar. 2 legs down, 3 legs down. Leg 1, pullback, leg 2, pullback, leg 3. And we have 3 legs up because 56 is a trading range bar. Leg 1. So the third leg down for the bears. 57 is the first pullback for the bulls. Or you can even argue 55. This is a tough trading range to read. There's also a bull leg in 55. So leg 1, deep pullback, leg 2, pullback, leg 3. And then intertwined with that is the bears, leg 1, pullback, leg 2, pullback, leg 3. Bears, bulls trying to get the breakout 61, and then you can see, 61, and then you can see big bull bar closing, or big bear bar closing on slow 62. Does get follow through, but then bad follow through after on 64, 65. 2 bull bars closing on their highs. Sean to get second leg, leg 1, pullback, leg 2. Deep pullback, and then the leg 3. Where are the trap traders? I'm trying to make this a little bit quick here. So bulls that get by that breakout on bar 61, they're going to buy more lower. And in this situation, the fade worked. So they buy more lower. This line is their first buy. This line is their second buy. And you can see that there's a small scalp for bears to make. They're trying to sell the 50% level, the pullback. They can make a scalp on 67. Then doesn't even make 1R down here if their stop is up here. 1R is down here. 68 rallies. And then look, sorry, I'm jumping around here. Look at the tails on all these bars. There's definitely more selling at the EMA, but then eventually it kind of dies down and the bulls get the breakout 74 through 79. They even go past bar 62. So not the visually it looks strong. Bears have price control. However, bulls have time control. With this being the first fade bar after this reversal. This is the first bar, which is generally a better fade. It's gap setup. Anyways, guys, that's right around 9-10 minutes. Hope you guys have a good one. Thursday and Fridays left. Be smart. Use your stop loss. Stick to the systems. If you are not a systematic trader, tell me what you're trading discretionary wise, and I bet there's a hidden system in there. Anyways, guys, thank you for your time. I'll talk to you tomorrow. Bye.